Here we are now, folks, beginning the week for Monday, May 6th, 2013. With yet another installment of our Forex analysis and training. This is an analysis video talking about a very significant, extremely significant level to pay attention to on the euro-yen. There's been quite a bit of price action already in and around this area, so we're continuing to watch it. Wanted to point it out to you and show you what we're looking for to be able to trade from it and to place trades. So let's go take a look at that analysis. All right, so here we are on the monthly chart. We always do our top-down analysis to determine the overall bigger picture. Now, we're still in a pretty strong monthly uptrend for what we look for in the MACD3 system. That being said, we're always being very, very, very careful to pay attention to significant areas of support and resistance. You notice over here in the month of, or I should say months of, we've got November and December of 2008. It comes rallying up from this low and hits this area right here, 131.10. And in the near term, it kind of served as a little bit of a tipping point. When price was able to eventually blast through it, it went up another 1,000 pips over a few months of time. When it first rallied to it from below it and rejected it, it dropped down 1,500 pips. You can see this is 1,500 pips here. And this is 1,500 pips. This is even more than that. So we're sitting right up at that level now. So if we go to the weekly chart, we've begun to get quite a bit of weekly rejection in and around this area. And we, with our currently active members, have been looking for the sell trades, and then we've also had some buy trades after bigger pullbacks. In fact, just today in today's live trading webinar, we gave out a sell opportunity up here with about a 20 pip stop loss and had them take profit around 60 pips, about a 25 pip stop loss. So several members got into that trade during our live trading webinar during the US session and made some pips there today. So what we're looking for then at up and around this level is either one of two things. We either want price action to break well through 131.10, 50 pips or 100 pips through, with a nice strong upward signal, strong and building upward trends on the daily chart and the 4-hour chart as we pop above that level, getting a trend that starts to look something like this, nice and building with the building candles and the strong moving averages as we go above that level, to then continue buying up toward next resistances, a couple hundred pips above 131.10. Now, conversely, and this is what we already took action on here today, and this is not the first time, we also mentioned a sell opportunity back at this time and also back at this time. And the rejection began, and then the 4-hour trend developed to the sell side. So there were multiple opportunities. Same thing over here. We mentioned some selling opportunities for our members to take advantage of through this drop as well. So if we were able to repeat this type of pattern, bunch of 4-hour rejection, we've already got that going. If it were to continue to drop down through that range like it did in the past 3 times now, then we're looking for sell opportunities down toward, say 128 area. All right, so as we get 4-hour rejection, possibly even more daily rejection up in this area, 2 or 3 or 4 daily candles. We have 2, so another day or 2 possibly, or sooner, depending on how this all starts going. If the rejection continues up in and around this area up here, then we'll look for further selling. And so we teach our members exactly what to look for when watching for these trade setups. So if you're interested in exactly what we're looking for, come on in and check us out, forextradingcoaches.com. If you've got a great system that you trust in and rely on, look for your opportunities for buying above this red level 131.10, or for selling if we continue to reject it heading down toward 128, and then following that 127, and then 125. So there's definitely some support areas of trading toward. All right, folks, so have fun with that one.